There's a new way to stay connected and know what's happening with Market to Market when you subscribe to Market Insider. One email and a lot of information awaits you. Go to markettomarket.org and subscribe to Market Insider. Welcome into the live recording of the MTOM podcast here at Nebraska Public Media. Ross Baldwin is our guest. Ross, welcome to Nebraska.
Thanks for having me, Paul.
When you're the newest analyst on the show, you have to kind of go wherever we ask, right? Is that how that works?
Yep, that's how it seems.
Ross is one of our newest analysts. You are from Northwest Iowa, for lack of a better geographical description. Tell me about your home.
Correct. I'm from Anthon, Iowa. It's a small town just 35 miles southeast of Sioux City, Iowa. I grew up there my whole life. My mom, she came out here with me to Lincoln, and on the way out here we were talking about it, and she said, yeah, I lived, the house they brought me home to is the one I lived in, and that's where they still live. I was raised on a cattle feed lot. We still feed cattle today. My dad, I got two brothers that work there. We feed around 4,000 head of live cattle there, and that's what we've done our whole life.
So Ross is a guy who we bring in to very heavily dive into the livestock market, but I'm going to ask him grain questions here in a minute. Because why not? We are in our tour. This is another one of our live episodes we've done. We've gone to Jessup, we've gone to Cherokee, done a couple at the Iowa State Fair, and this one in Lincoln. One more to go in LeClaire, Iowa. So we appreciate everybody being here. Huge thanks to Nebraska Public Media, Maggie Burnt, Amy Maston Knight, Nancy Fink, and Stacy Decker, the general manager here from Nebraska. Let's give them a hand for opening up their doors to us. And we also brought a few people from Iowa PBS. Our general manager, Andrew Bott, is here. Andrew, say hello. Yeah, you can't hear him. That's what's enjoyable about this position right now, boss. Andrew used to be a producer on Market. He's traveled all around the country when he worked as a producer at other shows. He's from Council Bluffs. So he feels like when he went by Council Bluffs this morning that he has to stop there at some point. Otherwise, he gets in trouble with his parents. Cameron McCoy is here. He's one of our bosses now. Dave Miller, you met. Caroline, who was the very person who helped put this event together along with NPM, as well as Mark and Kenny on here. So let's dive in if we can. So when we do the when we do the TV show, what was your first interaction with Market to Market as a young lad, Mr. Baldwin?
My first interaction with Market to Market would have been growing up as a kid. My dad watched Market to Market. My grandpa always watched Market to Market. And I would say just as cattle feeders, the analyst that we all talked about and watched would have been Walt Hackney, the cattle guru that went on there. And Walt did an absolutely fantastic job. So I would say that was my first interactions growing up as a kid, being exposed to Market.
So when Walt's on, I didn't see that. Do people know who Walt Hackney is? I think there's many that are nodding. Walt had a certain way of speaking. You know, Ross, we got a lot of cattle here we got to get through. His gravelly voice, was there something that inspired you listening to him like, hey, this cattle thing's kind of fun?
I think the thing with Walt that is an inspiration is just his straightforward, no-nonsense type of approach that Walt had, which when I think of a lot of cattle feeders in the cattle industry, that's how you operate, is you know, just no nonsense. And Walt, what was so cool about Walt was how he was in the trenches. I mean, he was buying feeder cattle, and so he knew that market as well as anyone that could have went on the show.
And as you said, you're in the trenches now, knee-deep in cattle. Let's talk as a producer for you. How did you get started? When was your first animal?
So my grandpa, Wesley Baldwin was his name. He started feeding cattle back in the 1950s. And so my family, we've been involved in it ever since then. I have an uncle that had a feedlot also. My first cousin, his son runs that operation now. And then my dad started his own feed yard. And the two feedlots are across the road from each other. And then I have another cousin not far away that has a feedlot as well. And so we've just grown up our whole life, you know, feeding cattle and doing that. My first interactions when I would have, you know, got my first livestock would have been cows. My dad and brothers were no longer in the cow-calf business. We just primarily focused on finishing fat cattle out, but we, for a lot of years, had cows, and that would have been my first interaction, was cow-calf business.
So why not full-time for you in the business, and how did the numbers and the analysis, buying and selling for others come to be, I should say?
So I went to college. I graduated high school in 2007. I went to Maryville, Missouri, Northwest Missouri State University. I graduated from there with a degree in animal science, and for having an animal science degree, I always wanted to get into the grain industry. And so I spent quite a few years out after college. I was a location manager for a privately owned grain elevator south of Anthon. And so I was in charge of buying and selling corn and soybeans and marketing that, doing the risk management. From there, I went and worked at an ethanol plant and did a lot of the risk management there, spread trading, buying corn, selling DDGs with farmers and producers. I've always enjoyed the markets. Mm-hmm. The cattle market has always been my passion, but working with farmers, producers, ranchers, I knew I always wanted to go, get into the brokerage side of things, and that's where I got to. We started our office in March of 2020 during COVID of all times. But
yeah.
That's kind of how I got into the commodity industry.
And were you with agmarket.net right away?
Yes. So we started with agmarket.net, which Matt Bennett, who's a regular analyst, he's a co-founder of agmarket.net, and so I've got two partners in my office, Kevin Clausen and Brianne Streck, and so the three of us started our branch of agmarket.net, like I said, in March of 2020, and at that point we had all worked together in corporate America, and at that point in March of 2020 we were like, what in the heck did we get ourselves into? You starting that, and looking back, it was the best decision that we ever made.
So the little secret is that agmarket.net, Matt Bennett, had been on the show. So Ross Baldwin had actually been on the show prior to your first time on TV, because Matt Bennett calls Ross Baldwin for his information about the livestock market. So when Matt calls you a question before you started coming on the show regularly, what's Matt asking you?
Mainly just what's going on in the cattle market, any big things that I need to know. Mm-hmm. What's cash trade doing? What do you think it's going to do? Things like that.
Have you ever heard any line you've given him that he delivered and stole and used as one of his own?
I don't know that he's directly said anything. I got to be careful here because Matt's going to be watching this.
So whatever Matt said was right, was spot on, right?
Correct.
All right. So then a phone call comes to do this, an MTOM podcast, partially because we'd heard from Matt, but partially because we'd heard about you and reading. What was that first, let's start with the podcast, when you heard Market to Market called, what'd that mean?
You had tried calling me, and I actually was not in the office, and so I had just left the office that day, and one of my partners said, Paul Yeager called for you from Market to Market, and I'm like, my stomach dropped, and I got a hold of you, and we did the MTOM podcast, and I'll be honest, I was extremely nervous. I have not went back and watched it since I've went on the show a few times, but I need to go back and watch it. I would imagine I use several filler words, lots of ums, knows. I try to limit those now today, but.
Okay, that's fair. That's absolutely fair, using the ums and the uhs. You do the podcast, which in reality was kind of a test run for us to see what you had to say. Matt spoke glowingly about you.
I didn't know that at the time either.
I don't exactly say that either, because I don't want to get in your head.
People told me afterwards, I bet that was a test run or a trial to see if you're good enough to go on the show. And I'm like, oh boy. And then
we call and asked, what your first time on the show, I found to be, it was great. We paired you with somebody else to talk grains, so you're not having to talk about grains. But when that first episode happened, what was it like back at home?
I mean, it was really cool. I will say the first time I went on the show, I was extremely nervous, and it went well. I think the thing that made me the most nervous is I was feeling it out, and what I did not know going on the show was that Paul does not give you the questions before you go on. And after I learned this. I have a whole different appreciation for every analyst that goes on there. But when they said, there is no redos, you really have to screw up bad for us to stop it and restart over. Well, at that point, I was really nervous before the show started, but it went really good. But back home, back to your question, we had a little bit of a viewing party after that first show. We went to my brother's house. My whole family was there. And yeah, the kids all thought it was pretty impressive. I've got nieces, nephews, and then my 3 children. And yeah, everyone thought it was pretty cool because we were watching on YouTube. The kids, that's all my kids watch is YouTube, and my nieces and nephews. So.
And now they just are like, oh, Dad's gone. Dad's on TV again. Well, is that how it's gone already?
Yeah. And when the funny thing is my wife and our 3 kids, they went down. One time the kids all went down and went into the PBS studio. And it was funny that the only thing that the kids saw that day that they thought was so cool is Market to Market has a YouTube plaque, the play button, because for what, 100,000 subscribers?
100,000 subscribers.
And when my kids saw that YouTube play button, they thought that was the coolest thing ever. Nothing else. I could have completely fumbled on the show, but they thought Dad made it because of the YouTube play button.
I think we had a couple of baskets or bags of things for them to do, PBS themed things. So that was fun, and we always love anybody that comes by. So yeah, you're nervous, but I think things came out. Yeah, I don't try to write really any question down because I really want to listen to what you have to say. You know, generally we're going to talk about 3 things with you. And the challenge, just so you know, and I think I've said this, when we have strictly, it was the same with Walt, when you had a market, a grain person with a livestock person, well, normally it's wheat, corn, soybeans, then we get to the live. But he'll just sit there. I don't want him to sit there for the whole time. You kind of feel awkward, like they're having this conversation and I never get to talk. So we mix it in. And are you okay that I do that? Or do you think we should maybe, you just want to wait your turn until it's your turn to talk?
I'm fine waiting my turn. I know you're eventually going to get to me.
When you start talking, what has been the biggest change? Let's just start since you started with Ag Market. 2020 to now, what do you think has been the biggest change in the cattle market?
The cattle market, I mean, we've went from one extreme to the next. I mean, since COVID in 2020. COVID, gosh, from a front month futures perspective, I believe futures got down to 80 cents during COVID. You know, it was an absolute disaster. We were backing up. I think the worst of when we were backing up slaughter during COVID, it was like 50,000 head less a day that we were slaughtering. I think we had a couple weeks there where we slaughtered 250,000 less head of cattle than what we normally would have. So, I mean, we went from, and I hope I never see that again in my life. I mean, that was the most extreme bearish case scenario. And throw in shutting down restaurants, and I always think of stadiums, the ballparks, and everything that was shut down to where it seemed like we were never going to be able to crawl out of that hole. I mean, we easily backed up over 1 million head of live cattle.
Because not only did we not have a place we didn't have anything no outlets for the food. We also had these animals that were scheduled weeks in advance to go to the packer.
Correct.
That were stuck.
That you could not get rid of. And we ran into it at our family's feedlot. I mean, it felt like we were very fortunate that we had good relationships with the packers that we worked with to get our cattle slaughtered in as timely of a manner as possible. You always try to find the silver lining in something like that. But so we went from the most extreme situation that I've ever seen, and really the most extreme situation in a negative way that the cattle industry has ever seen, to fast forward to last week. 2 weeks ago, we were just selling fat cattle for $215 live, picked up. So we're at all-time record high prices.
Are we still unwinding 2020? Has that been any part of this problem of high prices? Because it's a problem for those of us who are trying to buy the beef, let alone those of us who are trying to sell the beef.
Yeah, we're still seeing some of those impacts play out, and you can even go back. I could sit here and talk an hour about how this whole deal played out, but you can even go back to 2014 to 2016, how we went to the previous all-time record highs, to 2015 and 16, which was a disaster across the cattle industry. You had people getting out saying, you know, I'm exiting the cattle industry. So we started seeing people get out of the cattle industry all the way back then, and it started getting to better markets. Then in, I believe it was August of 2019, Tyson had a packing plant fire down in Holcomb, Kansas, and we were right back to a terrible market, and it took 6 months for that plant to come back online, and we started getting the industry straightened out. I believe it was about January of 2020 when it felt like we were getting it straightened out, and then 2 months later, COVID happened. I mean, it was a culmination of events that have led to where we are today, because even post 2020, so you had COVID, people saying, okay, we've already went through 2015, 2016, then Holcomb, and now COVID, I'm done. There are easier ways to get through life than to be in the cattle industry. And so you had people leaving for that reason, and then we started getting droughts in 21, 22, and that really started speeding up this whole process, is because of how many cows we started culling.
And drought in areas that are key and very concentrated, large operations. There's some west of here, there's some south of here, farther south of here. Why is it that the cattle market is so dependent in the setup that we have now with livestock? Why is it so weather dependent?
You need a lot of feed to keep livestock, on feed, and you need good growing, good rains, and ample feed supplies to keep heifers back, to retain heifers, to have that incentive. And so that's just where we've really been juggling this. I mean, you throw in record high feeder cattle prices that we've seen now going on 2-3 years. It's hard to retain heifers then for that reason, but then you also throw in the weather issues we've had over the last few years, and there's just not enough feed to go around. So when you start having drought issues occurring, the cows go to town, and that's what we've seen now. The U.S. cow herd is down 12% in 5 years, and that is staggering. Everyone in here knows that the inventory report that we've seen, the U.S. beef herd, it's the smallest we've had since the early 1950s. It's the smallest on record.
Do you ever anticipate that's going to get bigger?
I do. Absolutely. We will see these numbers increase off of these low numbers that we're in, but I don't know that we go back to the high numbers that we had in 2019. 2019 was our most recent peak that we had, and I don't think we're going back to those numbers. Just a lot of dynamics have changed over the last few years, but I do think we don't stay at these low numbers that we're at right now.
What's the reason? But why would we want to expand? Because if prices are what they are, when you start producing more, last time I checked, that's supposed to flood a market and lower prices. Mm-hmm. So from a producer standpoint, why do I want to get bigger?
The reason we will eventually expand, prices will drive that expansion. So there will be some reason that we drop feeder cattle off of these record high prices. Live cattle will not stay at $2.15. I don't think $2 plus live cattle is the norm. I don't think just say $3 8-weight feeders. I don't think that's the norm. And so when those prices do go back down, producers will retain more heifers. The other reason that I think you will expand the herd back is the cow-calf guy is wildly profitable. Everyone knows that right now. When you're selling feeder cattle at these prices, you are wildly profitable. What do you want to do when you have these kind of profit levels? What's a farmer want to do when you have $8 corn? I want more of it. And it's the same thing. We seek more production in row crop farming to capitalize on these windfall profits, and that will lead us to expand this herd across the cattle industry.
We only show a 4-month snapshot of the markets on any given week. But if we pull that thing back out 8 months, 12 months, it has been on that stair step, which sets up this question of the election did not change or set the course of this market. However, the election result now has changed it a little bit in closing down borders and the amount of cattle that are going back and forth between Canada and the U.S. and Mexico and the United States. What's that done to this situation?
The tariffs, and tariffs it's tricky for any one of the commodity markets right now to navigate. You and I could get off this set right now, and Trump could have put something out on social media that completely changed what I knew about tariffs or thought I knew about tariffs before we came on here. The tariffs, though, for the beef industry is extremely tricky right now to try navigating, because where you look at tariffs, say on Mexico and China for the corn and soybean industry. Now, China's not a major player right now in U.S. corn. Mexico obviously is. You spend that right away as negative. I mean, we need more exports, not less. The cattle industry, on the other hand, it doesn't automatically go to a negative situation, the tariffs on our major trading partners, because of how tight our numbers are. You can actually spin it to where it's friendly, that the tariffs is friendly. Now, it's crazy because I'm going to say friendly for the beef industry. And when I talk about beef, I'm talking about retail beef, not cattle, retail beef that the packers produce and the retailers sell for beef. You can spin it as these tariffs. So if we put tariffs on beef imports coming into our country, well, we have a shortfall right now of beefs. Our beef, U.S. beef imports are forecast to be up 6% this year. Last year, I think they were 23, 24% higher year over year because we don't have enough right now. What we don't have enough of is the lean beef, and that's driven off of cows because our cow herd is so low. When cows go get slaughtered, that's a lean beef that they produce. A lot of that goes to your fast food burgers, your processed beef. That's what that goes to. We don't have enough of that right now. Well, if we start putting tariffs on that, we still have the demand there. So we will bring that in. The negative part of that, it probably gets put on the U.S. consumer. Those tariffs would. The other part, now feeder cattle imports have really fallen off a cliff because of the New World screwworm problem in Mexico. They are slowly picking up, but we import a lot of feeder cattle from Mexico. We import a lot of feeder cattle from Canada. So that's where if you start putting tariffs on that, those feeder cattle will still come in. Where that gets tricky, it's the Canadian rancher and the Mexican cattle feeder that probably wears the burden of those tariffs. They'll just discount them. The U.S. buyers will discount those cattle coming in here. So it's extremely tricky on the cattle side and the beef side, but you can say that it's not negative. It's actually probably friendly here.
I thought it was only the government reports that had funny numbers. You're saying that the producer, there's going to be, that is how this will maybe play out economically.
Yeah.
Do you get the sense that Canada has the same appetite and the Mexican farmer has the same appetite as the American farmer to withstand and handle the current situation? How long will I can tolerate this, but not much longer?
The tariffs and all that. I think that boils back to more their government and elected officials and the negotiations they're going to have because let's be honest, we're all out here playing the game. We're going to continue to raise cattle and farm and whatever the policy is, we're going to navigate through that. So I don't know that it's them that can, make that decision. But the problem, now this is my opinion as the tariffs relate is I don't see that Canada and Mexico has the leverage here, the upper hand in all of these tariffs and this trade war. The biggest issue, though, for their producers, say Canada, for example, a lot of Canadian fat cattle come to the U.S. to get slaughtered. So that is, it's a major impact for them. And, as a percent of the U.S. GDP, it's just Mexico and Canada, it's so small as a percentage of our GDP. So it gets tricky. And, the unfortunate part for their producers is they're probably going to face them, negative consequences, way more severe than anything that we would.
Of all the factors, who is at the greatest disadvantage as we sit here today with prices? Is it the consumer buying hamburger at the grocery store? Is it the guy holding, the farm holding the big fat cows in Canada? Is it the one in Texas that needs to ship across to feed for cheap over in Mexico? Is it the one expanding out here to the west of us in Nebraska or in Oklahoma?
The one that's at the biggest risk?
Yeah.
I think it's a culmination of everybody. I would say the consumer, I don't see the consumer being at the most risk for them. Okay, so $6 a pound ground beef, it's expensive. There's no question about it. What inflation has done, though, is made everything expensive. If you want to go out to eat, you can't go through McDonald's without spending $40, $50 to get 3-4 meals. So when you go back to a $6 a pound hamburger, yes, from a long-term what we're all used to, it's expensive, but I think inflation has showed that $6 a pound hamburger is really not that expensive because everything's expensive that we touch. But when I think about who's at the most risk, and this is probably me being a producer, I go back to we as livestock producers are probably the ones at the most risk. If the consumer does eventually start to shy away from the high-priced beef, which so far the U.S. consumer has remained so resilient. This is actually, what we don't talk about enough is how this has been a demand-driven rally in the cattle market. U.S. beef demand has been off the charts, but that could change at any point. So let's just say they do step back away because of high prices. I feel like us as cattle producers, whether you're a cow-calf guy, you background feeder cattle, or you finish out fat cattle, we're the ones at the most risk because these are astronomical prices that we are at. And if 2014 to 2015, 16 taught us anything, it's how fast these markets can change. Or you go back to $8 corn, how fast we go from $8 corn back to $4 corn, historically speaking, or $18 soybeans. You know, these markets, how fast they revert back to what we all think is the mean is so fast that us as producers, we're the ones at the most risk, I feel like.
Hold on, I'm looking for my cliches, though there's nothing on these. What's the one about the market? Something about stair step up? Do you have the sense that the elevator shaft down
Escalator
could happen?
up, elevator down.
Could happen?
Eventually it will, there's no question. The tricky part with the cattle market, obviously, and with any market is when. None of us know when that is. And the thing that scares me the most is I have this thought in my head that no matter the commodity market, they always start selling off, there I say, I think, but then always, but they always start to sell off when we as producers don't think they should. And I think that goes back to always, it's the most bullish at the top, bearish at the bottom. It's about like $2.15 fat cattle. Is everyone bullish cattle right now? I think yes, we are.
I think, and to go back to Matt Bennett, Naomi Bloom, Ted Seifert this week, we were talking between the Plus and the show, and after Plus, we were get to livestock, and you know, Matt said something, Naomi said something, and I almost wanted to say it on air. I just said it after. That's been the common theme of, well, at some point, this doesn't seem to pencil out to buy feeders right now, but people are, and they continue to do so. I have heard that almost every week for months and months. Has COVID and everything else and just the inflation, maybe it's more inflation than COVID, given insulation to the cattle market to be at this elevated level?
I don't know that it COVID or any of that's given the insulation. I think the insulation that the cattle market has had recently and moving forward is just the tight numbers. Okay. And it's kind of crazy to say that, because if you compare back to 2014, when we made the previous all-time record highs, we have consistently had 1 million more head of cattle on feed over the last year versus what 2014 did. The thing that gets so hard to match up though is demand. Demand, when you look, not that grain markets are easy, because they're not. No, let's be honest. Trying to analyze any commodity market anymore is not easy. I don't care what it is. But it is a little bit easier to gauge demand in, say, the corn and bean markets versus the beef market. The beef market is so tricky, and pork would be the same way, and poultry. It's so hard to gauge all of that because of just how demand ebbs and flows in the U.S. consumer. You can track retail, you can track the cutout, you can track beef exports, but just to try gauging though the outflows and how much the consumer continues to buy, you can get there, but it's just not as easy. But I think the tight numbers is what has continued to insulate the market and the leverage the cattle feeder has.
I had a conversation with Darrell Peel. I know you read a lot of his stuff down at Oklahoma State, and he has talked about this number situation, and I think it's kind of staggering to him to think about. I mean, that's a guy who's seen a lot of things you go through. So numbers, let's wrap up with the consumer before we do one more thing. The consumer, I can think of at my grocery store shop, there's still there's still a good crowd around there. Nothing has, I don't see pork taking off or seafood or poultry. It still is beef. Do you still find that beef is still the winner no matter the price?
I can't say no matter the price, because you can always get to a price where high prices cure high prices. But for right now, we have record high retail prices, but I go back to the $6 pound hamburger, when you look at what other things cost, it's not terrible. It's expensive. I am not trying to sit here and say that $6 pound hamburger is cheap, but just compared to everything else that we have seen inflate over the last 2 to 3 years, I don't think it's that bad.
Let's talk about the young guy or gal that's graduating from university, wants to come back home, or just graduating from high school, wants to come home, and usually the first path in was to buy some type of livestock, maybe a way to get started. If you're a banker right now, are you writing any of those? Are you hearing bankers writing less of those notes to some of those people who are starting because of the price of a feeder right now?
I think that all probably depends on just everyone's personal situation. I don't know of any examples off the top of my head where a banker's writing, less notes just due to the high prices per se. But I mean, there are less cows and calves, that are out there. I mean, there's just the U.S. cow herd is so much less. There's no question that, there's fewer and fewer people coming back and starting, getting into the livestock business.
You getting into the hog market instead?
Me personally, no.
Do you think some people will see that as an alternative?
I don't think so from an independent standpoint, an independent hog producer. I mean, the hog industry is just, there's so few independent people in it. There's a lot of row crop guys that have hog barns, no question. They use the manure on their ground that they have. But even a lot of that, I mean, they're contracted hog barns that some of the major players fill up, so.
Speaking of contracts, also in the poultry industry, and they're dealing with bird flu. We see the stories about eggs. We see there's certain isolation, certain regions that are hit harder than more. What do you know about the poultry industry, just from even a topical standpoint of your livestock hat, and what is it that we need to know about that?
It's actually, for the cattle industry, it's been relatively quiet here lately, which, knock on wood, because early on when the avian influenza was being detected in the dairy herds, it was really bad for the futures market. And I do go back to that period when we were having such aggressive sell-offs in the cattle market because of the avian influenza found in dairy cattle. I wonder if a year ago we wouldn't have been at some of these higher prices sooner if it wasn't for how that story derailed the cattle industry at that time. It had no fundamental change to the cattle industry, and part of me wonders if, when we've had some of these recent pullbacks in the cattle market and it's been so violent to the upside, if that isn't part of the avian influenza situation, how it held us back from maybe more of a gradual climb a year ago versus this explosive rally that we've seen. But around the avian influenza, though, in the poultry industry, I mean, continues to be a huge story, and it doesn't look like it's going away anytime soon. Now, egg prices obviously have really fallen off, but a lot of that's been driven off. We ramped up egg imports so much.
To an extent, it wasn't a ton, but
Yeah.
I mean, it was some, and there's probably going to be some hearings about why were your prices this high, and you're not surprised at that?
And now I'm sure there will be some of those discussions happening.
Do you get the sense that the consumer has been weary of buying poultry just because there's never any talk about the health of the meat that we buy, but do you think the non-educated shopper has been spooked?
I don't have any reason to get that feeling. I think, protein in general is tighter in the United States. I mean, when you combine all three proteins, beef, pork, and poultry, I mean, it's all tighter. And the hog market, the hog and pigs report that we got to see recently, I mean, it's showing fewer hogs also in this country. So I don't get that sentiment. But when you just look at the tightness that we're seeing and where demand has gotten to from a protein standpoint, I think we'll stay very well supported moving forward.
The day that we're recording this, a couple of highly anticipated reports, one on acres, one on stocks. Both seemed fairly neutral. Mm-hmm. What does more corn acres mean for the livestock industry?
So the corn number came in, I believe it was just shy of a million acres more than what the average trade guesses were. Well, the last I had looked, I believe corn closed about 3 to 4 cents higher, which was, a very good performance for corn to shake off that. I mean, corn acres were 95.33 million. And I mean, that at the end of the day, that's still a big corn number. Now, we've seen the corn market get hammered over the last, say, 1 to 2 months. And a lot of that is we had the managed money crowd pushing on an all-time record long position. As of last Friday's Commitment of Traders report, they were only long, I believe, 73,000 futures contracts. I mean, they have ran for the door. And a large driver of that has been, I believe, this acres story. And I think quietly there was probably, even though the average trade guess was, say, 94.5 million acres was the guess, I think quietly there was probably a lot more people that were worried about more than what we've seen today. So this was a good sign to see. Now, 95.5 million acres, it's still a lot of corn. So for a livestock perspective, we've got a long ways to go to grow this. I mean, we still got to get it planted, which we will do that. I mean, the farmer always gets the crop planted.
It might be June 15th, but they'll get it done.
We'll get it planted. And with the size of the equipment today, I mean, it don't take long once people get in the field. But we need plenty of moisture. There's no question. And where some of these acres increased, I mean, we're going to need moisture. So from a livestock perspective, if there is a lot of corn, though, if we raise a big crop, a trend line yield, which has been difficult over the last couple of years to get up to that big trend line that the USDA says, but if we get up there and have cheap corn, cheap feed, that we will continue, I mean, at the rate that we are on livestock. Now, the other crazy part is, though, is let's say that is negative to corn prices. I mean, with where corn has sold off to, and you got $2.10 plus fat cattle or $2.15 live cattle, a lot of these feeder cattle still make sense. So it's crazy to say. Now, there's still plenty of feeder cattle that break way too high versus where their months are when they'll go. But it's hard to get negative feeder cattle. I mean, too negative feeder cattle. We can always sell off, don't get me wrong, but.
Still optimistic after all of this talk.
The one plug that I do want to get in when you bring up optimistic, and I made that feeder cattle comment, my biggest fear, not my biggest fear, I got several of them with the cattle market, but one of my biggest fears is when you look at the feeder cattle market, the managed money crowd as of last Friday was record long, new all-time record long, 32,000 feeder cattle contracts. That is massive, how many long contracts their position is. And if you went back to the previous all-time record long, which they had done back in, I think, 2011 or 2012, it was only like 22,000 contracts. I mean, there are 10,000 more contracts long RA today. So when you get bullish and I say that the market will be supported, the reason that we are already at these prices and staying so strong is because the funds are record long feeder cattle. Whenever there comes a point when they want to exit that door, it is a very, very small door in the feeder cattle market. There's not a ton of liquidity, and that's why that market always sees those big moves.
Is that because the doctors and dentists have bought some of those contracts?
It very well could be.
Do you get, I mean, that's actually kind of a serious question, because that is always whether it's the old front of the New York Times or front of the NBC News, whatever it was, that was the indication the top of the market was there. But when you see some of that money that's not normally there in, good or bad?
It's good, and it's good because look at the prices we're at. Now, it's only, I don't mean only good, but I mean, the biggest reason it's good, though, is if we as producers are using it to our advantage. We all get mad when the funds are selling it and taking us to horrible prices and the volatility. Right now, we don't talk enough about how it's a good thing that they're record long. That's why we're at these prices we are. But yes, you brought up a good point. I mean, when the position that they have right now, this massive long position, it shows you that there are players in the cattle market that are not normally in the cattle market. And so you go back to if something were to change or we get a negative headline that drives this thing lower, it could be panic like we haven't seen in the feeder cattle market. I bring this up, fall of 23. Feeder cattle, they had that big rally August, September, I think, and the funds were long. 18,000 contracts of feeders, and they didn't go to a record long, but that was the fall, winter of 23, we had that big sell-off, and they went from being long about 18,000 contracts at their peak to, I believe, they went short like 5,000 contracts, something, before it bottomed out. But between that September and the low in December, feeder cattle sold off 50 to 60 bucks, and that was from an 18,000 long position to short 5,000. Today, they're long over 30,000 contracts. So while the market is bullish today, the fundamentals are really good. We're in good shape, but in my eyes, the writing's on the wall of how this story eventually ends. Now, I just wish you would tell me when that time was.
Right, because that's actually in my notes too. This is going to end soon. Okay, for our audience that's here, when they're watching, whether it's you or someone else, give me something in the next 3 months that's an indicator that things are changing.
For the cattle markets?
Anything.
Anything.
Cattle, feeders, even hogs and maybe even in this poultry market.
I think the one indicator that I think for the cattle industry, the one indicator that you could really watch to see that things are changing is the throughput at the packing plants. And right now it has stayed stable. But there's no question the packers are going on over 12 months, well over 12 months of negative margins. And it always boils back to is how long will they continue to do that before you start to see more prolonged slowdowns at these plants. And that has not happened today. I don't know if and when it will happen, but it's just a question we as cattle feeders need to be asking ourselves. If something like that were to happen where a plant or plants would really pare back throughput, that would be a big negative. Another thing to watch is really the cash markets. I mean, right now, we have not had sustained weakness in the cash markets, whether it's cash live cattle or cash feeders. These feeders will not break right now. And if we were to see feeder cattle start to maybe soften up or weaken up at barns, or the feeder index really to have more of a meaningful correction, that would be a sign that this thing's changing. Another thing we haven't really talked about is the lack of imports from Mexico. We've had, when the New World screwworm came out in November and they shut the border down, there was no imports from Mexico in December and January. We will April, right? Yeah, it's going to be April tomorrow.
It's going to be the second.
So April 4th, we will get the next update of what the February imports from Mexico looked like, and they started to pick back up. Now it's been slow, but they are ramping back up. So that could be another thing for the cattle markets that could change this thing.
Right, and I said the second because that's the next round of tariffs. The fourth is what you're talking about. So there's
all sorts of things to go with this week.
Yeah. And anything that you just said means it will expire by this time tomorrow, right? That's kind of the way it goes in the business.
Another thing. We could talk forever.
Well, this is our first hour. We're going to go for another 4, so come back, go get some food. You could do it too, couldn't you?
I could.
All right, leave me with one last thing.
One last thing is the economy. There's no question the stock market has just been getting hammered over the last 2 months. And the Dow, the S&P, and the NASDAQ. And there's growing concerns around a U.S. recession. And there's growing concerns with the tariffs and the impacts that could have. Now, there's always been a big correlation between the equity markets and the cattle markets. They have completely disconnected themselves, and you could make the case that the cattle markets followed the gold market here recently, as both of them went straight up. But in the back of my mind, I just wonder if the equity markets were to continue to set into a prolonged setback, and it's been a big sell-off. But if we were to, God forbid, go into a recession at some point in this country, and there again, none of us will predict when that happens, but I just question how long can the cattle market separate itself, and really all commodities. Whenever the equity market has a big correction, commodities in general follow it. So I think back to your question, that's another indicator to probably keep your eye on is the equity markets as well.
But again, like the other things that you're talking about though, but that stock market is at numbers we've never seen before by far, not just like a little, by a lot.
Correct.
And so I still don't know how to read that.
Correct.
If that truly, because even if it sounds or rhymes the same, it doesn't necessarily seem to perform the same.
Correct.
Which has to be one of those things that keeps you up at night.
Yeah, absolutely. The things that are the hardest or that you can't answer that keeps you up.
Well, you did good at answering a lot of my crazy questions. I appreciate it.
Well, thank you.
All right, Ross Baldwin, everybody, thank you so very much.
Thanks, Paul.
And my thanks to Nebraska Public Media, and thank you for coming to our event today. This has been a production of Iowa PBS in conjunction with Nebraska Public Media here in Lincoln, Nebraska. New episodes of the MTOM come out each and every Tuesday. For Ross Baldwin, thank you, everybody. Thanks, Ross.
Thank you. Thanks, Paul.